Hey, good day, everybody. Welcome back to our newest edition of Check the Map. We've been out of pocket for about the last 30 days, doing some continuing education, just brushing up on our skills and learning more to be better advisors for you. So, thanks for joining us again after about a month off of Check the Map. So, lots to talk about. Today, we're going to discuss the current government shutdown that we're in the midst of. We're going to talk about some updates to the housing market, and then we're going to dive into Medicare and the Affordable Care Act plans towards the tail end with some updates and reminders as that season is quickly coming upon us. But over the last 33 days since our last check the map, um, equities have had a pretty good little run here. So um, gold has taken the cake still in the last 33 days. It's up over 12% just in the last 33 days. Um, US bonds are slightly up about 0.36% in that time frame, so more or less flat. And then you look across US stock indices, even um, developed international markets, really across the board, we're up pretty substantially. Tech has led the way. Tech has led the way. NASDAQ 100 is up over 6% in the last 33 days. S&P 500 uh, slightly behind it, just over 4%. And then we have the Russell 2000, 1000, and 3000 all up just shy of 4%. So even small caps really have rode this wave alongside the mid and larger caps. And the Dow is really the only one that's been lagging. It's only up 2.65%. But again, we've seen this continuation of equities moving up, right? Not being thrown off necessarily by some of the policy and governmental changes, but risk, which is typically a safe haven, right? A risk off asset class that you run to when equities aren't going well, is double the Nasdaq 100 and three times the S&P in that same time frame. So super interesting times. Overall, it's been a pretty solid month to be invested as a whole. But Kirsten, you want to break down some of the current shutdown and put it in historical context as well?
Yeah, absolutely. So obviously we've been in a government shutdown since October 1st. Today we are recording this on October 9th, so we're going on just about 9 days here, and I'm trying to find my screen here. So show you guys a little bit of historical data as far as how the S&P 500 has returned during government shutdowns. For the most part, it's not anything dramatic. Now, if you go through this is obviously the S&P 500 during the length of the shutdown listed here, and then the 12 months after. So for the most part, the 12 months after, the S&P 500 historically has done pretty well. During the ones with the longest date of time, these 9+ kind of days, we saw a little bit of pullback in the stock market. However, all that being said, the latest shutdown we had in 2018, 2019 of 34 days, the market gained 10% during that time and 23% 12 months after. So, you're going to see headlines out there, I'm sure, as far as, oh, the market's going to do this or that because of the government shutdown. you know, Take that for a grain of salt. Data says could be either way. The average length of time, as far as the government shutdowns that we've seen historically, 8.2 days. Again, we're going on about day 9 here. Median was 4. So we're starting to get on, if you will, say, I guess, these higher end of that length of shutdown. So just kind of interesting to see. I was interested that someone actually made a chart for all of this. So I wanted to share that. Um, a few other things as far as the shutdown. We live in an interesting time where, let's see, I don't know if I have the quote here, but I have it printed out, where people are able to bet on real life and real time things. If you've heard of, those Kalshi or Poly markets, where you can kind of, it's sports betting, but on real life things. So on there right now, as of this morning, it was a 63% probability that a shutdown would last longer than 10 days. And it was a 40% chance that it would last longer than 15 days. So again, we're on day 9. Do we think it's going to keep going? Do we trust these? I don't know, but just thought it was interesting to bring that up as far as how much longer we think the government will be shut
Yeah.
down. Obviously, this is, federal workers are on unpaid leave right now, and we're going to probably start seeing more effects the longer that this goes on.
Can you leave that up for just a second? I
Yeah,
think
absolutely.
visually it's super interesting because that
Yeah.
the return during the shutdown,
Mhm.
most of the downturns were all in the 70s, like
Yeah.
really since
Right.
1981, it hasn't really adversely affected the market tremendously.
Not
And then
recently.
I think this is also visually a great reminder that investing in stocks and equities is a long-term investment, right? So you get past these blips of these shutdowns, whether it's 4 days or a month, and most of the time we're seeing the longer term outlook look pretty positive.
And it's not really
So
political either.
no,
No, yeah, it
I
really
mean,
isn't.
look at the 12-month return. There's
Yeah.
only three down years, and one of them was negative 0.4%. So,
Yeah.
right. And the biggest was under Trump and all Republican control, right?
Hmm.
So
yep.
yeah, the data is certainly interesting. And then to your point about Polymarket, that's really in the last 2 years. Uh, some people are leaning on that data as a better predictor than any other poll that's run by Rasmussen or New York Times
Put
or
your
all
money
those
where your
other
mouth
sources.
is.
Right. And I think the track record has been playing out to where it tends to be a little more accurate in
Hmm.
retrospect. So but yeah, super interesting. We're all gambling now, right? I'm not personally, but that could be a concern on top of our consumer debt at some point. But
What is interesting about this, especially at like the federal government level, like when we see data and reports come out at the federal level, there's typically very emotional investing or market activity that occurs based on those data and those headlines. We have
Yeah.
seen almost no negative reaction to the shutdown whatsoever. I mean, we've seen rallies since the government shut down,
Well, we've
and
missed a few reports.
we've met. Yeah, we yeah we missed the employment report on Friday, which I'm sure would have been dazzling and probably wouldn't have had any negative revisions to prior months.
Oh, I'm
Um,
sure.
yeah, but what is everybody thinks like panic headlines, the government shuts down, everybody's losing their jobs, they're not going to get back pay, yada yada. The market has not responded to that panic, so to speak. We've seen rallies and a lot of it too. Like if you look at the big picture with what actually matters from like a financial data perspective, the Magnificent Seven, I was just reading yesterday, they make up about 35 to 36% of the market cap in the S&P 500. So right now, our market, especially at a large cap level, pretty much does what those seven companies do. A lot of the price movements are based upon them. When one of them moves really heavy one day, we see the markets move in that same direction, generally speaking. But like Tyler mentioned, with the small caps being up and rallying, we've said before, like when the Fed lowers rates, there's better access to capital for those smaller cap companies, and more people with savings rates going down as a result of the Fed lowering the benchmark rates. A lot of investors are more inclined to take on maybe a little more investment risk in a smaller cap company versus the safe havens that they were in that were affected by the Fed lowering their rates. So we've seen small caps rally. We've seen the market as a whole kind of rally, even despite the government being shut down. So that's one thing that has been kind of interesting because it typically, like, if it's a national headline about the Fed doing something with rates and yes, they lowered rates, which is probably a lot of that's a big reason for the small cap rally. But when we normally see big, especially panic stricken headlines at the federal level, there's some activity associated with that, or that usually follows. And we've pretty much seen resilience among investors and the investing public since the government shut down.
yeah, I think we'd be remiss though, like, 'cause that's all extremely accurate from the market side, right? And sometimes with the market being this, it's behavioral
Yeah.
finance in nature, but it's also um, it can be cold when you look at real life scenarios. So,
Yeah.
without a doubt, this current shutdown is definitely adversely affecting
Yeah.
many households, and as have been a lot of the Doge cuts. I know we we've talked with a lot of households over the past couple of months that were actually directly impacted by Doge cuts earlier this year. So, um, right, the market is looking beyond that and doesn't consider the short-term pain of individual households, but that's certainly a very real thing. So, maybe this is an opportunity to right-size the government. Hopefully, it's done in a thoughtful way that's and people can still find good opportunities on the other side. And with that, probably talk about housing market updates because
Mhm.
uh, whether you're renting or owning, certainly one of the largest expenses and has been the most inflated over the past 25 years. So what's
Yeah.
that looked like lately?
Well, so we're like kind of closing out the summer, beginning of fall on a fairly optimistic note, but our trend is kind of going in a concerning direction as far as where the homes are being purchased. So just a couple data and reports that throw out there, and I'll contextualize these. So existing home sales for the month of August went down 0.2%. So they're hovering roughly where they were month over month. But the median price of an existing home is 422,600. And that's up about 2% versus a year ago. So let's contrast that, right? Existing homes, we've talked about this before. There's not a ton of starter homes being built right now. Most of the homes that at least we see geographically in our area are, 400,000 and up. So new single family homes for August jumped 20.5%. Huge surge, way bigger than any optimistic expectation from any of the economists, and that's actually the highest number since 2022. So that's a good sign that they're selling new single family homes. The concerning issue is that, so where we're migrating towards, right? People are buying more single family homes. The median price of a single family home in August was 413.5, however, which is up almost the same as existing, 1.9 from a year ago. However, the average price for a new home, single family, was 534,000, and it's up 12.3% year over year. So not only are they not really building starter homes, but the homes they are building that aren't technically starter in nature are also getting substantially more expensive, 12.3% inflation in 1 year, right? So if that's the direction that we're going, we're also probably continuing to price out some of the people who are entering the workforce, getting out of college, maybe looking for their first home. The good news is that mortgage rates actually over the last few weeks have dropped quite a bit. We're about 0.5% lower, according to Mortgage News Daily, than we were from our high a few months ago. And along with that, refinance activity has also surged quickly. So for the people who did buy, who went ahead and said, you know what, let's get in a house now while I can, even though rates are 7% just a few months ago, there are opportunities to bring some payment relief through refinancing right now. I'm sure there's a lot of debt consolidation efforts going on with rates being where they are and our outstanding credit at a national level being as high as it is. With housing appreciation comes equity, comes, lower rate comes along, and people might be more inclined to access some of the equity in their home to try to consolidate or get rid of their debt faster. We are definitely seeing trends in that direction. So overall, economically speaking, the housing market seems to be overall trending in the right direction, but the migration towards new single family homes with an average price of 534,000 is certainly not reason to be optimistic for the first time home buyer that's out there looking for a starter house.
Yeah,
Yeah,
because
just more
those
and more unattainable.
in some areas of the country, those might be starter home prices, but for the
Yeah,
for the Midwest, where where we are geographically located, those are not starter home prices
right.
by any means. So
No.
and and rents obviously have only continued to go higher lately. So
Yeah.
it
That
is,
supply is getting affected too by like the housing starts for both single family and multifamily went down dramatically in August. So, there could have been a potential surge in completions and getting these new single family homes sold. But this, for the first time, and since I've been tracking this data, it's been a while, the first time that single family and multifamily are both down significantly as far as home starts go. I think single family retracted 7%, multifamily retracted 11.7%. So the starts of both of those types of houses too also went down. And if you think how that affects the overall supply of the housing availability, that probably doesn't lend itself to supporting lower rents going into the future for people that are opting to rent instead of buying.
Yeah. Yep. It's a challenge for sure. So, but overall, hopefully we can. There have been challenging times in the past as far as
Hmm.
housing costs. So hopefully we can work through it, and the market economy can digest some of this in an efficient way and
Hmm.
not a catastrophic way. So,
Yeah.
um, well, it's almost Medicare open enrollment season, which, thankfully we don't have to deal with that directly since we don't directly sell Medicare insurance. But it is a very important time of year. So I just wanted to recap a couple things. Um, can you guys see my screen now?
Yep.
All right, good deal. The computer is giving me a warning like it wasn't going to let me share my screen for a second. So just had to test it with you. So open enrollment for Medicare starts next week, October 15th, runs through December the 7th. But just had quite a few conversations lately about Medicare and Medicare Advantage. So I wanted to briefly recap, some of those differences there. Nick, you want to break down some of the big high level differences between the two?
Between Medicare and Medicare Advantage.
Yeah, yeah.
Yeah, ultimately, one of the big differences is with Advantage, you're essentially in like what most people are familiar with, like a PPO. You're in a provider network where your coverage options could potentially be more to your liking or choosing as long as you're here, like in the area that you're more familiar with. Maybe not quite as tailored or suited for people who plan to travel a lot or even snowbird in retirement. So you are that's probably the biggest contrast between the two is the fact that you're in a preferred network of providers that are really around your area.
Yeah, I think that from a planning perspective, that is the most important distinction. Because even in your local area, maybe you have uh, two or three hospitals in your general area. They might not all be inside that Medicare Advantage plan network, so
Mhm.
it requires a little more pre-planning. But if you're on vacation or visiting somebody, you're probably not researching the hospital systems available to you in the area to see who's in your network. So the
Mhm.
Medicare Advantage plan can certainly, and sometimes it works out well. I'm not saying there's not times where it's not the best option, but um, it sometimes it can end up being more costly. Those $0 premiums that some Advantage plans offer, with the added benefits you're entitled to with dental, et cetera, can be very attractive. Um, but the end cost you might pay for needed care could be substantially higher than the traditional Medicare route, where you have A and B through the government. You have a Medigap supplement plan through a private insurer, and then a Part D prescription plan. So uh, all that being said is, thoughtful planning needs to go into that initial Medicare decision. One of the things, if you're on traditional Medicare, you could always go to a Medicare Advantage plan if you wanted to. But if you're on a Medicare Advantage plan, the only way to get back to traditional Medicare is to medically or health qualify. So sometimes households will enjoy those $0 premiums for quite a while. And then maybe they're in their 80s and they have some more substantial health issues. And the Medicare Advantage plan isn't really covering things well, and they would like to go back to traditional Medicare, but now that they have these health issues, they don't even qualify. So it can be you just want to be cautious and not box yourself in to future risks with healthcare costs. But again, open enrollment's about to start, so at the very least, you're really going to want to review your Part D prescription plan. because those formularies change every year. So if that's something you haven't looked at for some time, it is definitely worth the look. A few years back, a household I work with, they hadn't looked at these Part D prescription plans for a while, and we were able to connect them with somebody who does that full time. They saved almost $7,000 that next year on their overall prescription costs. And so during open enrollment, again, that's the time each year you can really fully review that. And there are independent Medicare agents available where they can take all of your prescriptions, the exact, whether it's generic or the, what's the term I'm looking for? The
Brand
the
name.
brand name or generic and exact dosages, do you take it once a day or once a week, all those, how many milliliters of this, et cetera. They can plug all that in and not just compare the monthly premiums, but your total projected cost for the following year. It is absolutely worth the time to do that. And this is the time starting October 15th. You have through December 7th. Um, you can also review your Advantage plans during that time. Now, this is an article from Kiplinger, uh, just from this week, and something to be aware of. A lot of these larger insurance companies, United Healthcare, Humana, Aetna, etc., they're scaling back their offerings of Advantage plans and Part D prescription plans for next year. So again, this is another reason to uh, find the time in the next month and a half to make sure you're set up as well as you can be. And down here it says, for instance, United Healthcare, they're going to stop offering Medicare Advantage plans altogether in 109 different counties in the U.S. Right, that's going to affect 180,000 people. Um, Humana is cutting plans in hundreds of counties and in a few states to stabilize its financial margins. And so um, it says their plans will be available in 85% of US counties next year instead of 89, and 46 states instead of 48. So two entire states just lost Humana going into next year. So this is this may or may not affect you, but it's again worth the time to dive into it. And these are things where if uh, you're at home and you have questions about Medicare, we definitely incorporate it generally into our planning. Like we'll have these discussions with you. But if you need someone to visit with who does this full time, we have some trusted contacts in those areas. We're happy to connect you with during this time frame if you'd like to review these pieces because it's super super important and can you might think, oh, my Part D prescription plan is $8 a month or $20 a month, but what's the real cost for the year once you add in all your prescriptions? So, um, and on the traditional Medicare side, um, what we're seeing, Part B is likely to go up fairly significantly. We don't have the exact increase yet. However, um, I gotta scroll. My apologies. Yeah. So the likely increase, again, not announced yet, the likely increase to Medicare Part B is going to be 11.6% higher next year, jumping from the 180 range up to 206.50 per month. So pretty decent chunk. And we've talked about this before. You might get your 2 point something, 2.7% raise from Social Security, and then you just hand that off to Medicare to offset that cost. That seems to be what's likely going to happen in 2026. Um, and what it says here in this Yahoo Yahoo Finance article, we saw a decrease in Part B premiums a couple years ago. And the reason for that decrease was that this Alzheimer drug wasn't used as much as they thought it was going to be. They didn't end up having to pay out for that drug, the Medicare as a program for this one drug, and that allowed them to do a significant decrease in the last couple years. But now, for various factors, it's probably going to go up a decent chunk, up to over $200 a month now. So, from a comprehensive planning perspective, this is just another reminder that not only do we need to have a real long-term plan for reliable and sustainable income, but one where we can actually effectively combat inflation and give ourselves a raise. Because we might have another almost 3% increase on Social Security that's going to essentially be a moot point with the rise in Medicare. So it's important to look at all these pieces as they're working together because this is not likely to decrease. I mean, I think we can all agree that healthcare costs have not gone down and probably won't in the near future. So that's on the Medicare side. We also have and this comes back to our government shutdown conversation. So this is super exciting stuff. Affordable Care Act plans, um, open enrollment for those. So through Obamacare, healthcare.gov, Affordable Care Act, open enrollment starts November 1st, goes through January 15th. The caveat there is if you wait till January to set up a plan, you're not going to have that coverage in January. So if you're wanting coverage to start January 1st, you need to have it done well before January to get that done. But these plans, we don't know what the costs are going to be just yet. One thing we do know is this is from Blue Cross North Carolina's website. Um, the last few years, by few years, I mean since 2021, people who have been taking advantage of Affordable Care Act plans have benefited from enhanced premium tax credits. And so that has reduced a lot of people's monthly premiums to make these insurance plans more affordable. But like some other provisions, that are even some of the new tax provisions that are from the One Big Beautiful Bill Act that are good from 2025 to 2028. Some things aren't permanent. These enhanced premium tax credits are set to expire at the end of this year, meaning that some people might not get any tax credits to offset their cost of their insurance. Some might get it, but just at a lot lower levels. And part of the current government shutdown and the fighting, and these senators are basically making like TikTok videos of confronting each other in the hallways. It's it's kind of immature, if I may say so. But part of it is uh, healthcare and health plans for immigrants, illegal immigrants, etc. But this is wrapped up in this government shutdown, if whether or not they should extend these enhanced premium tax credits. So who knows how long the government shutdown will be? With Kirsten, you shared that earlier. It could be over a month. We won't know. But I think from a planning perspective, as of right now, we have to assume the enhanced tax credits will go away. So Blue Cross gave a little chart here just saying the estimated increase in cost based on those enhanced tax credits going away. So if you have a family of four that makes 60,000 a year, they're going to see a over $4,000 increase in insurance premium costs, not healthcare costs, insurance premium costs. If you have a middle income couple, just couple husband and wife age 45 that have 125,000 a year, um, they might see a over $24,000 increase in health insurance premiums. Again, not health care, health insurance premiums. So um, just because we're almost to open enrollment for both of these programs, I wanted to make sure we reviewed some of these changes or potential changes, and then that this is the time to really work through questions you may have or some planning opportunities for you or your loved ones. So whether it's healthcare or tax planning or any part of what we do from a financial planning perspective, if you or people you care about have questions, please do reach out to us. You can get a hold of us through our website, srgfinancialadvisors.com, or call us at 573-302-7212. Because there's a lot happening for sure, and we will walk alongside you and help you look at the entire picture to make the best decisions possible. So, Kirsten, do we happen to have a calendar for the next couple weeks?
I do have a calendar. Now, if
We
everything actually happens and we get to see these things, that's another conversation. Let's
right,
see.
since we've missed some reports with the shutdown,
All right, can you see my screen?
it is loading currently. There we go.
Oh, no, I just clicked on something.
It's still
Here
showing.
we
You're
are.
good.
Awesome. All right. Yep. So let's see. Today we're on the 9th. Looking ahead, we're going to have weekly jobless claims. However, we're not going to probably have any employment data coming out. Fed budget, again, a lot of these things we're probably not going to likely see. Consumer sentiment, I would say we probably will still see at least some consumer sentiment surveys that come up. Those are, like I said, just the surveys. CPI data, that is one that is at risk of not giving us any data due to the shutdown, as well as the PPI numbers. And then we have housing starts coming up on next Friday, and we should be meeting by then. So all that being said, there's some things coming up, but if we actually see them, depends on how long this shutdown lasts and as far as what federal data that we actually get coming our way.
Yeah, it should be a unique time without a doubt. So, well, as always, thank you for joining us, taking the time out of your day to hear about what's happening in the markets and economy and household financial planning. We'd love to visit with you or anybody you care about if they have questions, and we'll talk to you soon. Thank you.